As a financial professional, a former tax lawyer, guest lecturer, speaker, and mother of three, I've been thinking a lot about investments and tax and philanthropy lately, in addition to back to school. And there is one concept that I felt compelled to share because it is very timely. Changes were proposed in this year's budget that will come into effect January 1st, 2024. And if you are someone who is impacted, it's very important for you to be aware so you can speak to your accountant, your tax professional, really understand the impact of these rules on your specific circumstances. So, what am I talking about? I am talking about alternative minimum tax, often referred to as AMT. Now, I'm going to cover what is AMT, who does it affect, very high level, what are the changes, and then why does this matter so much? Now, first of all, what is AMT? Alternative minimum tax exists to ensure that taxpayers, namely individuals and trusts, pay a minimum level of tax. So it is a calculation that is always being done kind of simultaneously. Like a tax software will always do it in the background because you have to, as a taxpayer, you have to pay the higher of the tax payable according to the regular or traditional tax rules or the AMT rules. And if you have to pay tax based on the AMT rules, it's because you are earning a lot of income and paying a low level of tax, and the AMT rules rejigged what you were allowed to claim so that you paid a higher minimum amount. Some people describe it as a temporary tax because if you earn more income in subsequent years, it is possible to reclaim some of that tax, but not necessarily if you don't. Now, who does it impact? AMT really impacts higher net worth, call it, but really higher income individuals because it has to do with how much income you earn. And individuals who tend to earn their income through salary or business income are less likely to end up in a situation where AMT applies. AMT will more often apply in situations where, for example, there is a large capital gain and tax planning around reducing the tax associated with it. Now, what are some of the changes that were proposed in this budget? I know that some stakeholders in the charitable giving space, which is giving away my next point, but are writing letters. There's a lot of thinking around whether the objectives of these proposed changes will result in the desired outcome. And so we'll see what that ends up producing. But the changes really, they're targeted at the same kind of really high income, higher net worth individuals, and the authorities are trying to collect more tax dollars. So certain rules have been changed to affect the AMT calculation, which would mean larger amounts of tax having to be paid because certain deductions won't be allowed to be calculated, certain credits won't count. For example, one awesome way of giving is through the donation of marketable securities. Most of us know that when you donate marketable securities that have a gain, it's great because you don't have to pay tax on the gain and you get the benefit of the tax receipt. Now, in accordance with these new changes to the AMT rules, you used to get the benefit of the donation of marketable securities even in your AMT calculation. You will no longer. The rules have changed so that there will be some sort of tax and income inclusion. And the same goes for numerous other exemptions and credits and deductions without getting into the specific details, although it really does only target high income individuals. They try to keep that intact. Now, why is this so important? The reason that there's an extra amount of discussion around the changes in these rules is that they may very well impact charitable giving. Now, I don't want to get into the conversation as to what's right as far as tax policy, but we do know that philanthropy is extremely important to many not-for-profit or charitable organizations. And in many cases, it is high-income individuals who are giving a lot, who are doing a lot of philanthropy in part because there is this regime that makes it favorable from a tax perspective to do so. Now, will these changes have the impact of reducing the overall amount of charitable giving that Canadians are able or choose to do, because the AMT calculation or tax will be payable at lower levels of charitable giving, meaning that you will not be able to reduce your tax payable when you have a large capital gain, for example, from the disposition or sale of a business or a property. You won't be as able to reduce your ultimate tax payable through charitable tax planning because of the new AMT rules. I hope this is clear. As usual, please do not hesitate to let me know if you have questions or comments. This is absolutely not tax advice. I just want to allow you to be aware of these new changes so that if you think they might apply to you, or even for fun, ask your accountant, ask your tax professional, be aware so that you can optimize your timing with respect to your charitable donations and other tax optimization. Have a wonderful day.